What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, guys. Welcome back to another live stream. I got so much to talk to you guys about. First of all, markets are insane. We're going to get to that in a second because last night we had a little bit of a unexpected commentary from Trump. He came out super hawkish on the Iranian war, and no one expected that. The market was posturing before yesterday for a Trump that was going to come out and say, we're done, we're out of there, this thing's done, we're over, like it's their problem, and to continue the rhetoric that he had been on the last few days, but not so fast. Markets kind of freaked out because you had this dynamic of Trump coming back and saying, you know, actually, and he kind of went off the rails in regards to back to, you know, we're going to finish the thing. And so the market's freaked out. Why am I late? I had to get coffee. And also, you really want to know why I'm late? It's because I have some drama to tell you guys about. All right. So look, here's the thing about, you know, someday I may choose to leave the whole business side behind. No time soon, by the way. But sometimes this stuff just drives me crazy. I had someone in our Discord. I woke up this morning. My staff was like, oh my gosh, there's somebody, you know, causing problems in the Discord. And I was like, what's going on? And so I get into this thing. Basically, I try all the time across all of our content, in my disclaimers, in my website, on our Discord, etc. We have so many warnings about people who do like imposter scams where they are pretending to be me or someone from my staff and claim that they are going to manage money for you and going to essentially you give them some sort of crypto. It's always crypto because it's sketchy, and they want to manage your money for them. The problem is what they do is they impersonate my name, my picture, or someone from my staff who is known in the Discord, and they will try and get people to send them money. And so I had this person in our Discord who is posting all around saying, you know, Nick is scamming me and claiming that I'm managing their money or that I offered to do that. But this is, again, long story short, we woke up to a mess in the Discord of a bunch of people, you know, like, what's going on? I mean, of course, I have to thank the community members. Many people were vouching that that is nonsense and that we would never do that because we wouldn't. Why? Just anecdotally for a second, why would I have this person claims, by the way, that I have this front-facing Trader Nick, but then there's a secret version of me where I'm scamming people for Bitcoin and telling them I'm going to manage their money and double and triple their money. That goes against everything about the rhetoric of my content, my beliefs about trading and financial markets. Total nonsense. But this person has been fooled, and I've tried to reach out to them like, hey, you're getting scammed. It's not me. You know, I don't do that stuff. And this person has just like persistently posted about it. Anyways, I woke up to that, dealt with that drama, and that's why I was late today. At the end of the day, I don't manage money for people. I'm not licensed to do so. I don't reach out to individuals asking you for money. All of that stuff. I try and say that all the time. Every single day, I have people on my team who remove fake impersonators of my name and picture and other staff members from our team, from our Discord. This is an ongoing issue. So please, just a PSA, be careful. Always, 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 if you have any question about the services that we offer, the only place to go to do that is to our official website, a1trading.com. Everything that we offer that is some sort of pay for product is available on our website. Just a PSA, you're not talking to me if you're talking to me on Telegram. I don't talk to anybody on Telegram. I don't talk to anybody on WhatsApp. I hardly DM people at all. To be completely honest, I'm really busy, so I don't do that. So please be careful. Just trying to put out some, gosh, that's so frustrating. It's like I have to do that every week or more often, it feels like. Anyways, let's get back to order of business today, because basically what we had, lo and behold, that one dang trend line keeps holding for the S&P 500. So let's talk about what took place. So yesterday, going into the commentary from Trump last night, the market was expecting essentially a, let's end this war situation. That was the commentary going into it from Trump and then and team. And then now there was this full 180 reversal where all of a sudden we're still going to target the energy facilities. The Strait of Hormuz must be opened. Basically some hawkishness in regards to the war. And so we look at that, and something to think about. Something to think about is oil is ripping, and I did catch the longs. So I don't know if we still have this. In fact, we might not have the reading yesterday or today, because when I looked at this, we had a big boost in score. Oh, we do still have it, due to crowd sentiment being very bearish on oil. It seems like in the last few days, crowd sentiment went really far to the bearish side of oil, thinking, okay, war's going to finish. But then what we had in the last, 48 hours is Iran kind of seemingly said, no, we're not going to back down. We're not talking about ceasefires, et cetera. They rejected that narrative again. And it seems like last night Trump had enough, and he was like, all right, no more Mr. Nice Guy. I'm going to be more, we're going to finish the job. And so the market freaked out. Stocks went lower. Nasdaq was down 2%, 2+% last night. Oil is up 11% today. Again, why are you getting such an aggressive move on oil? I'll tell you why. It's because that was not what the market expected. The market expected last night, it was moving lower before Trump's speech, because the commentary expected was, we're done with this war. We're out of there, because Trump knows this is going to hurt his party's election results in the upcoming midterm elections. Ivan said, is this so he can save the markets? Who knows how it's all going to play out? But in the short run, what we have in front of us is a strong revival of that uncertainty about what's going on over there. And so oil is not playing around. Guys, we have U.S. oil at 110 today. UK oil, or Brent, is at 109. Interesting that U.S. went up more. That's interesting. Gold is plummeting back down, and this is because yields have advanced, right? So we saw a move higher in yields off of this. Take a look at 2-year yield, 10-year yield, 20-year yield, 30-year yield. So yields moving higher. Dollar is strong. We did see some resurgence in the dollar. So I caught 2 trades yesterday. Honestly, I took 2 trades that both were pretty clean yesterday. I shorted euro dollar, which, by the way, for members, I did get taken out for a profit on my first trade. I'm going to share an update on that, because I just remembered that. So I'm going to go here. I'm going to say my first target on Euro USD was hit and closed for profits. All right. Yes. So yesterday I took a short position in the group on euro dollar. Outlined my thought process. Basically, dollar has been in a strong overall upward trend. We were pulling back. Euro dollar was tapping into a pretty clear level of resistance. We've rejected here a couple times. As we came into that area, I took the short with a stop loss above this prior high in case I was wrong. Fortunately, this morning, I was able to close out of half of my position. I took 2 trades. I took 1/2 off. And so at this point, this trade cannot become a losing trade because this was a, like a 1.25 times my initial risk. So if this thing comes back, I will still take a very small profit on the overall euro dollar short position. Overall, if we do continue to move lower on euro dollar, which I think we could, euro dollar's got a nice score on the edge finder. We have a nice overall downward trend here taking place and rejection that took place. I mean, this was almost to the pip. We caught that, we caught this level right here, 116.27, pretty much within a couple pips here, 6 pips off from the topping point. So again, I think euro dollar is most likely headed back into the bottom end of this range. Of course, things are so jumpy with the headlines that, Trump could go back the other direction, but right now it is still very much on watch about what's going on with Trump. But so yesterday I took 2 positions. I took a euro dollar short position, or a dollar long, dollar bullish idea, and a oil long position. And oil popped in yesterday as a bullish reading within Edgefinder, giving us a +6 overall score. Flagging specifically a strong technical score to the upside. Institutional positioning was interesting this past week. We saw, we have seen institutions sitting on a large, long exposure to oil. By the way, I listened to someone talking about this, and I think this is spot on. I think a lot of institutional money has been buying oil as a proxy hedge. By the way, we did have unemployment claims come out. Let me pull that up. Sorry, guys. I've got so many things going at once right now. Unemployment claims came in better than expected, 202,000 unemployment claims versus 212 expected. So that is slightly better than expected. That's going to be more positive for the dollar and positive for oil, right? We want to see economic resiliency for oil longs. If you're bullish oil, you want economies that demand a lot of oil. How do you get an economy that demands a lot of oil? Strong employment, strong growth metrics, etc. Rate cuts would also be kind of ideal. So good jobs data this morning. Oil is, again, now up 11.5%, just ripping to the upside here. Bitcoin's down 3% today. Cannot catch a break on this. Again, resurgence of geopolitical uncertainties. We are not back to the lows. I think if you're watching indices this morning, if you're trading NAS, if you're watching S&P, this isn't a good look for starters. Something could change, but let's give credit to the bears here. This is not a good look for the bulls. We held support, we held support, we held support, we held support. We broke it, we retested it, we sold lower. We came back into that area. So far, the response has been very negative. If you're a bull, or if you are, bearish and watching for signs that maybe it's time to reconsider, this type of move, if it were to take place, would give the bulls something to look at. If you saw, this 1-2, anticipating maybe a third, kind of wave there. But for starters, going into today, that's not a good look. Nasdaq rejecting support that has now turned into resistance. S&P 500 also rejecting support that now has turned resistance. Dow Jones also just looks generally pretty ugly. But again, anything can happen with the next tweet, the next thing. I mean, I've seen a lot of frustrated comments about like, hey, every time I take a position, I'm getting stopped out on some kind of, tweet or something like that. So here's what I would just say to everyone who is feeling that frustration to any capacity. This is not what you necessarily want to hear. If you are very frustrated, I'm not trying to poke fun at you in any way, but it is still your fault. Even if there is a Trump tweet, even if there is something that, I don't know, the president of China says or the Iranian military says, it's still your responsibility. Every position that is in your account, it is not anyone else's responsibility. So if you get messed up by a tweet, shrug it off and move on to the next. If it's happening too often, if you're taking losses that are too big, that's still on you. Your position size is too big. You're not accounting for, you can't predict those things. So start there. You can't predict what the next tweet or when it's going to come. Okay, start there. Then what? All right, if that's happening, I need to size down. If I'm trading big size and I'm getting hit by unexpected geopolitical headlines, I need to size down. There's no other thing to think about, right? So, of course, you have to think through this stuff and make your own decisions on how you want to manage this stuff. But again, the worst thing you could do right now is just to be like, oh, I'm just losing money because of Trump. Come on, man. Don't be a loser. That's loser talk. Again, yes, it can be frustrating when that happens. It's frustrating when it happens to me. It's happened to me many, many times, right? Where I have a trade and it goes completely against me all of a sudden because of some sort of geopolitical headline, whether it doesn't matter who posts it, right? The point is, if you sit around and say, oh, the only reason I'm losing trades is because of this person or because of COVID or because of Biden's inflation or Trump's war, right? If you're sitting around doing that, you're never going to become a profitable trader. You have to learn to take full responsibility of everything in your account, even if it's something that you can't control, like you can't control what price does. You can control a few things in your trading. You can control whether you're long or short. You can control which things you're trading. You can control the size of the positions that are in your account. You can control the allocation. You can control the time frame you're trading. There's a lot of things you can control in your trading, but one thing you cannot control is erratic price jumps. What we're living in right now is a higher volatility environment. There is no doubt. And I've talked about this every single time the VIX has gone up dramatically. I've talked about this subject on my channel. Every single time, people get used to the environment that they're in, and then they get really upset when the environment changes. Like, for example, I saw a tweet this morning, somebody saying, Trump ruined the market. Like, I can't trade this market anymore. Well, then that's on you, my friend. Like, again, regardless of, I'm not trying to defend Trump. I'm just saying it's on you to adjust to the market you're in. You don't get to choose what the market is like. None of us do. You trade what you're in. So many people get used to this environment where volatility is low and controlled, and there's less erratic jumps in price. And then when this happens, when you get erratic movements, volatility across markets spikes dramatically. What happens is people who are used to scenario one get crushed in scenario two because they put on a lot of size. They think they're really good at this stuff. And they realize, wait a second, my trading worked here, but it doesn't work anymore. If your trading completely collapses in a new trading environment, back to the drawing board. You have to resize your positions. You have to rethink about how you're approaching markets. Yes, it's humbling. Yes, it's frustrating. Yes, it's annoying when a tweet sends your trade to a stop loss. But that's why trading is hard in general. There's many obstacles to becoming a profitable trader. One of them is recognizing, realizing, and even accepting and appreciating you can't control what price does and market volatility. You can only adjust. Typically, one way to think about it, for me personally, I like to think about it as like if the VIX is really high, I need to size down my trades because moves are going to be bigger, most likely, right? When you have the VIX very high, the Nasdaq's moves are no longer going to be 0.3% up on the day every day. They're going to be down 2%, up 2%, down 1%, up 3%. Like that's what's going to happen in a high VIX environment. And if you're not adjusting to market volatility, if you're not taking ownership of what's happening, I promise you, you will stay chasing your tail for years on end. Unfortunately, many traders have done that. And I know I'm coming across harsh on the subject, but it's from a place of love, my friend. I promise. Take ownership. Be tough, right? If you want to trade, you have to. Nobody's going to take care of you. Nobody's coming to save you. Nobody's going to trade for you. It's not Trump's fault you're losing money. It's your fault if you're not adjusting. Okay? Oil absolutely ripping here, guys. Up 12.25%. My goodness. Yeah, I've got to trail stops on this. This moved way faster and further than I thought it would. But I went long yesterday. Edgefinder gave us this. Edgefinder yesterday flagged a +6. Yeah, +6 yesterday on oil. I did go long on the pullback yesterday. Oil was down, I think, 2.5% on the day or so. And I pulled the trigger on a small, I mean, not a huge long position. That being said, it's because it's moved 12%, it's become a nice trade. Of course, a lot of my individual stocks that I've been buying are definitely going to be red today. But you win some, you lose some. Yeah, look at this. Is that a high for... It's definitely a high since that one Sunday open, or Monday night open, I should say. So how am I going to play oil? What I'm going to do is I'm going to take this stop loss that I've got, and I'm going to trail that in. I'll probably do that. I've got 20 minutes left on stream. I'll probably trail that stop just after stream ends. Nick, isn't the US dollar bearish when the jobs market is good because it adds the possibility to cut rates? No. Let's break that down. So I see where you're going. We're missing one part in that question. Here's the thought. When the jobs market is strong, it actually is a strengthening factor to the US dollar. Why? Well, because think about it. If you're thinking about like which place do you want to invest or lend money to? Well, let's make it even more local. Let's say you have a friend who is asking to borrow money from you, and you're doing analysis on whether or not you think you should do that, right? Well, what you'd probably think about is like, do they have income? Do they have a stable source of income? If the answer is yes, and you know that the loan is more appropriate for them to pay back easily because of their income, then you might be like, all right, yeah, I can give you a loan. But if it's, and by the way, I don't recommend loaning money to friends. I'm just throwing out a bad analogy here. Go with me. If they have no income, it's a way riskier bet, right? Because you're like, oh, how are you going to pay it back? You can't pay it back. Same thing for countries. If the jobs market and the economy, right, a good economy typically pumps out jobs, right? Jobs get created, industries are booming, jobs are getting created, people are getting wage increases. That's what a good economy tends to look like. So when the jobs market in the US looks weak, that is weaker for the US dollar. It makes the dollar look like a less attractive bet. Strong jobs, strong dollar, weak jobs, weak dollar. That is typically the way to think about it. So today's unemployment claims, which came in better than expected, they didn't really move the markets very much. However, just generally speaking, if you had, for example, on Friday or tomorrow we have the non-farm payroll number. If that number comes in really good versus expectations, that will most likely be dollar bullish. And if it comes in way worse than expected, like it did last time, by the way, that could send the dollar lower. So, yeah, strong dollar, a dollar typically likes to see strong jobs. I think what traders are eyeing is NFP. NFP is definitely an important one this week. I think what does make this environment challenging, and again, nobody's saying this market environment is not challenging. I know I went on a rant saying like, don't blame tweets or the war or Iran or anybody for your trading. I know I just went on that rant, but we can also, in sympathy, acknowledge that this is a challenging environment to trade in for many people who have been used to pre-2026. I think there's been a lot of traders who have probably gone from smooth sailing in 2025 to a very challenging market environment 2026. In fact, I'd be willing to guess that that same person probably traded a lot of gold in 2025 on the long side. And you tell me just how hard it would be to mess this up. If you're long gold in 2025, it was mostly smooth sailing. However, 2026 introduced a whole new environment. This is one of the most humbling things, by the way, about trading. I remember this was tough. It was a tough realization for me when years and years ago, I was doing a lot of back testing when I first got into this stuff. And once I really got into back testing seriously, it was a very humbling learning lesson that I would be able to backtest a system and find one that would work really, really well in a certain year or two. But then you would get to a change up in market environment, and that same backtest would perform terribly. And that, like, I don't know how to explain. If you've ever backtested, and somebody out there, like, if you've experienced this, like, I don't know, tell me in the chat. If this has been you, you tell me. You backtest a system and it does really, really well in a certain environment. Like Lee says, you just described to me. Again, from personal experience, my friend, I'm not trying to, in no way am I trying to, make fun of somebody who's struggling this year, because this year's been a challenging switch up. Markets are different this year. Last few years, buy tech stocks and buy gold, and you most likely did really, really well. Now, a lot of people are going to be giving back a lot of those profits because markets are a B word. They're hard. They change up on you. No easy money, right? So anyways, backtesting, spending a lot of time backtesting, you build a system that works really well. And let's say you backtested your system for a couple of years. You're thinking, hey, I backtested my gold trading system 2023 through 2025. That's a good sample size, and it works really well. Right? But there's a flaw in your backtesting. This was a humbling. I'm telling you, like, this actually depressed me. I was going to college at the time. I was backtesting like crazy, and I thought I had found some really good strategies. The issue is, if you backtest an environment that is perfectly suited for your strategy, but you choose not to backtest a tougher environment for your strategy, a change up like we've seen in 2026 for many markets can be crippling and very, very frustrating. To fix that problem, I would encourage you to think about, well, maybe let me backtest an environment that is hard for my strategy. Don't just backtest, again, if you have a system, if your system the last few years has been buy dips on gold, you probably felt like a hero because it was working. But it doesn't work forever. It's called curve fitting, which many people do. Absolutely. One of the reasons trading is very hard is because environment plays a big role in how profitable your strategy is. You could be profitable for years on end, and then a new environment cripples your strategy. Again, if I'm bumming you out with this, you're like, well, dang, that just stinks. Like, you build a strategy and it works great, and then it stops working so great. It's hard, man. Trading is hard. Like, there's no other way to put it. That's part of the reason why it's so difficult, is you have environments where things. Now, this is why, by the way, what the heck? Oil's up now 14% on the day. Unbelievable. What was I going to say? Okay. So, long story short, that's why I ultimately switched to focusing on macro and fundamental analysis. Because if you build a system that's based on technicals, the challenge with it is that technicals miss context a lot of times. If you only look at technicals, right, you don't really understand, or you don't know why the environment has shapeshifted into a monstrous one. If you've been, I sell oil on rips, and I buy oil on dips. That strategy's worked well until 2026. Boom! If you were selling into this, you got hit hard. You got hit by a train with that strategy. By the way, in options world, this is like one of the most common pain points is selling options on oil works great until it doesn't. So what do? All this talk about how, how hard it is to find a strategy that works. The answer is no strategy works all the time. That is why personally I have 3 main strategies that I trade all the time simultaneously. Now I talk mostly about on my channel, I talk about my momentum trend following macro strategy, but I also have an option selling strategy and a longer term dollar cost averaging type strategy for specifically stocks and ETFs that I like. It's like a thematic position trading strategy. So the point is that diversifies a little bit of my approach, because at any given time, a certain strategy is going to work poorly, right? Having a couple strategies helps to smoothen the equity curve. Easier said than done. It's hard to find one profitable strategy. But again, one of the pitfalls is that you can find a profitable strategy that can stop working for 6 months and still be a profitable strategy, but stop working for 6 months. Yeah, oil. So what am I going to do with oil? I'm going to trail stops. I'm going to take this initial stop loss that I have. I'm going to put my stop loss right here. And I'm going to stop loss trailed. Just going to lock in my initial risk amount on this trade. Oil is so jumpy. This thing could be back down by the end of the day. It could, I mean, we're at 112 on oil, guys. This puts pressure on equities for sure. And understand that oil now is higher. It's at its highest point. If it were to close right now, it's at the highest closing point. To me, that puts pressure on gold. It puts pressure on NAS. And yet NAS has bounced a good bit. So to me, it's not out of the question that you could see follow through to the downside on equities here to kind of catch up to that oil move. Because I do think that is still, I mean, oil at 112, what does that do to other markets? Well, I know there's a lot of people who trade gold here, so let's talk gold. What does 112 oil do to gold? Well, more importantly, what does it do to yields? Yields go up because inflation expectations go up. Inflation expectations going up means less rate cuts. Less rate cuts means gold could take a tumble, right? It's part of the reason why gold took a tumble up until this point in 2026. When the stock market opens, do you think we'll have a crash? No, I think, right now the market's already selling off in regards to what took place last night with the commentary of being more pro-war, it seemed like, in terms of commentary. Or I shouldn't say pro-war. They don't necessarily want war, but they want to finish the job, I guess. Seems to have been the rhetoric, in my own opinion. And so the market took that and said, all right, yeah, this thing's not over. We still have a challenge here. So when I look at gold, I know there's a lot of people. I had somebody who was very upset with me because I did not talk about gold in my video yesterday. And I have to be honest, gold continues to be like a really, really neutral scored type of thing for me. Fundamentals still look strong for the dollar. You have growth metrics. This week we had really good really good data for the dollar so far. Let's talk dollar, because if you're going to talk gold, you really want to talk dollar, right? Because right now, if I look at the dollar score on Edgefinder, dollar score has been strong for a while. We had this week retail sales numbers beat expectations. PMIs, manufacturing PMIs were strong. Consumer confidence was stronger than expected. We also have inflation reads and the 2-year yield showing interest rates are less likely to come down dramatically. So these are bullish things for dollar. ADP was strong, and weekly jobless claims today, which came in just shortly ago, were stronger than expected. All of that to say, right? The dollar reading on Edgefinder remains strong. And so when I look at gold and all this economic data, it's actually surprisingly upbeat, and inflation expectations going up. I have to be honest, I would be more partial to being bearish gold than bullish at this time. Not necessarily forever. Long term, I'm kind of a perma bull when it comes to precious metals. But in the short term, I would not be surprised if gold in coming weeks made its way back down to these lows. I think that, again, going off of our thematic conversation about changing market environments, I think you're being met with the challenging reality that the easy money made on gold in the last few years, for now, in my opinion, is behind us. Okay. Now something could change. I do my best to remain permanently open-minded to things changing in markets. Right now, though, that leans me more towards, I think we're going to continue to see this correction in gold that has not taken place in a very long time. Let's just remember that over the long term, markets do tend to have corrective periods, especially when you have this kind of nonstop melt up in gold. I think it's perfectly normal to acknowledge and say, yeah, we're kind of due for some chop. Last year, towards the end of this rally, everyone and their mother was going to buy gold from, precious metals dealers, like physical shops. They were going crazy. I watch a lot of videos around physical gold and silver dealers, and they were having their best years ever, right? 2025 was a blockbuster year. 2026 started out really strong. And now guess what? A lot of them have, when I listen to their commentary now, anecdotally from their, firsthand accounts, interest in gold and silver has fallen a little bit. Because again, everyone wants to buy this stuff when it's going straight up. Nobody wants to buy it when it's going down or sideways. Anyways, I do think that more likely, I think there's downside for gold than upside. But let me be very clear. I have no position on in gold from a trading perspective, and I have no willingness to take a position at this time because of my software, my system, giving me a neutral reading on gold. Technicals are in a longer term upward trend. This is historically, the month of April is typically a good month for gold. COT data is still bullish on gold and actually showed increased institutional buying in the latest report. So all of these things considered, poor macro fundamentals in my opinion, but strong technicals make me neutral. So I have no personal interest in taking a position on gold, long or short. But if I had to take a side, I would say I think it's more likely that you continue to see this thing correct and pull back than to have some sort of jolt to the upside. I could be wrong. Maybe I am. But that's my opinion on it. Do you think NFP, a good NFP number, could negate bearish expectations for gold? If you had a strong NFP report, that would be bearish for gold, right? Strong jobs, strong dollar, typically not great for gold. But we don't know what those data points will be, so we'll have to wait and see. Hey, by the way, if you guys are not using the Edge Finder, we kicked off yesterday our big sale. We are offering, as you can see right below my camera, 40% off for our 4th year anniversary since we launched this product to the public. If you don't have a copy of Edge Finder and you are interested in getting one, now is the best chance to do so at our lowest costs that we do all year long, 40% off. And if you're watching here live during our live stream, if you message into our support staff using the link that's just been dropped in the live stream chat, you can connect to a real person on my staff who can set you up with a copy at a discounted rate of 45% off. We offer additional 5% off if you message in during our live streams. With that said, they can also set you up with a payment plan if that's something that you're interested in. A lot of times people are like, I want it, but I need to split it up into a few payments. Sure, our team can support that. Just send us a direct message. Let us know your circumstance, and someone from our staff can get you set up with a copy of Edge Finder. But don't wait. If you've been thinking about it, now is a chance to do so at a super low cost before the price goes back to normal. Speaking of institutional activity, the dollar continues to see institutional accumulation, at least as of the latest couple reports. This is COT data history specifically for the US dollar. The yellow line represents long percentage of institutional holdings. What we can see here is commitment of traders data continues to show overall a accumulation more on the long side, long exposure increasing relative to short exposure. If we take a look at gold, right, gold's been kind of flat. So again, kind of sticking with the neutral idea there. Nasdaq has been kind of declining, right? Consistent overall trending lower exposure, long to short ratio for gold. What about other services? Yeah, so if you want access to Stockbox, if you want access to our VIP group, our MetaTrader or TradingView tools, just message in, let us know, and we'll honor that discount during the live stream. Again, everything is 45% off if you send us a direct message while we're streaming. Okay, yeah. So COT data for Nasdaq. What about S&P? S&P, there was a little bit of a burst in bullishness here recently, but you can see this. Interestingly, they have been pretty consistently, kind of on the bearish side. What about Dow Jones? So if I go Dow, look at this. Dow had a big surge in selling here recently. Interesting. And what about oil? Oh my gosh, man. 14.4% today. What is going on? US oil, and look at that, right? Institutions have been accumulating oil before this took place and have continued to accumulate oil during this situation, right? So we can track that. We can see that over time plotted. Now, sometimes people say, well, COT data history, it's lagging because you get it a couple days late. True. But if you're more of a swing trader, this is especially useful to you because you can look at this and say, what's the directional trend of what institutional activity has been doing on our selected asset, in this case, oil? Clearly, looking backwards in the last few months, accumulation of oil is the theme. Now, that could change, but for now, the trend, it's just like anything else. The trend is your friend until the end. So when we look at institutional data, that's what I'm typically looking for, is surges in activity and or the trend of that activity. So part of the reason I do like oil is institutions seem to continuously be adding long exposure. So we'll see what happens with all this stuff today, but oil is breaking out to back almost to its highs, right? We went up as far as what, 120 or close to it? Yeah, almost 120. So we'll see. Massive FOMO on oil. Yeah, I feel you. It is. If you miss this move on oil, it's no fun. But don't make any silly mistakes, right? Stick to your system, stick to your strategy, stick to your risk management. Don't let a trade that you missed cause you to do something silly. There's always tomorrow. There's always a setup that's around the corner. But there won't be a setup tomorrow if you blow up your account, right? Don't do something silly. Be patient, be careful, stick to your rule sets, stick to your risk management, all that good stuff. Will you add more features to the Edge Finder? Always. We are constantly adding new things, building new stuff, maintaining the stuff that we do have. Our team behind the scenes every day, we're monitoring our systems, answering support tickets from customers. It's been a lot of fun, man. Again, this is the 4-year anniversary since we launched the product to the public. It has been a lot of fun. I've got to say, it's been one of the most, it's definitely been a highlight of my professional career, right? Obviously, like trading is one side of the things that I do. And then also I run this software business. Building and offering the Edge Finder to such a wide community of traders has got to be one of the coolest things I've ever done in my life, right? Having people message in and being like, hey, I love these features that you're working on. It's just like so exciting. It's so fun to work on a project that so many people are using, and it's helping them in their trading analysis to bring in more insights, right? No longer in 2026 are we just looking at, charts and trying to come to conclusions. Now we have all of this stuff that institutions have this stuff, right? Straight up, institutions have economic heat maps. They have all these sorts of proprietary tools. But what we've been trying to do for the last few years is bring that sort of stuff to the public at an affordable price. This stuff is super expensive to build. It is super expensive to maintain. most of the time, hedge funds and stuff like that have proprietary tools like this, they don't put it out to the public. They use it in-house and they don't share it. We've done the opposite approach. I'm not a hedge fund. I don't manage money on behalf of other people, but we build tools and we share them with the community. And it's a pretty much crowd-funded project. We sell copies, we use that money to build more tools, and we just keep doing that. And it's been a fun process. So pick up a copy. Like I said earlier, it is 40% off right now. If you message in during the live stream, you can get 45% off. That is an extra discount happening for a limited time during our sale event that we're doing here in April, celebrating 4 years since we launched the product to the public, and we're not going anywhere. We're going to keep making this thing better and better. So take advantage while that is offered. Guys, up next, we've got Miko Audu who's going to be taking over the stream and talking technical setups. He's big on trading psychology, technical analysis, and finding setups that meet your criteria specifically, otherwise sit on the sidelines. He's very selective with it, and I really enjoy his commentary. So stay tuned. Miko Audu is taking the stream just after this quick break.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Okay, what's up people? Hope everyone is doing well. Glad to be back. As always, I'll go through a bunch of markets, some markets which I'm looking to trade, see if I can find some opportunities this week. If there are any other markets, any particular time frames you want me to dive into, drop it down in the chat. More than happy to take a look. But Euro USD has been my main interest this week, and it has been a bit of a choppy market for the past few weeks. But I still do like the price action. I was looking for some shorts yesterday, didn't quite get an entry. Have seen some nice downsides, however, so I'm looking to see if I can get in if price does come back up again. But essentially the market is ranging, so I don't want to be too aggressive with entries and too aggressive with opportunities, because the better opportunities are going to be at the highs and typically at the lows. Anywhere in here, unless you're looking for some short-term intraday ideas, then of course, but any kind of swing for the week, I need price to be at the extremes of that range. And that's kind of how a lot of the USD pairs have been moving the past maybe week or so. Now, in terms of USD, I am still hinting at a bullish bias, but looking at the DXY, we are at a very significant level where it's kind of make or break for that bias. Because as I expand to, actually, no, let's expand to the weekly chart. As I expand to the weekly chart, you can essentially see that DXY has been in a really nice range for quite some time here. And at the moment, price is testing the high of that range. So it's make or break, because if we can break out of this range, potentially could be seeing a bit of a trend form for USD, and that could last potentially a few weeks. So there could be some really nice pullback plays going into the next few months. So I'm keeping an eye on that, but equally so, if price does not give us the breakout and we do fail here, then there's a really good chance that we're coming straight back down, not necessarily back to the low of the range. I will look at the midpoint of the range as my first target. Let me see if I can brighten that up a little bit so you guys can see it better. So the midpoint is just a natural fair value of a range. Of course, you've got the highs, you've got the lows. Those are the significant areas to look at, because that's the parameter of the range. But the midpoint is, in my eyes, just as important as well. And especially for trade ideas as well, because you don't necessarily have to be looking for a short from the high all the way to the low. A short from the high to the midpoint, or a long from the low to the midpoint, are really effective trade ideas as well, and pretty high probability too. So if price does reject this high here, then that midpoint becomes very, very high probability. And you can see with today's candle, we're looking pretty bullish. We're just smacking back into resistance. So that's why I said it's make or break, because Depending what we do here over the next few days, we'll kind of set the buys potentially for the next month or so, or next couple of weeks anyway. So with Euro, I mean, with DXY for now, I'm basically seeing what we do here. There could be some nice intraday shorts coming into the level of trading 100.2, which could mean some upside for Euro. But again, I'm looking to see what we can do nearer these areas here. Potentially there could be some short-term buys there for the dollar. But essentially for that bigger kind of trend, let's see what we do here. If we do reject, I'm looking at 98.4. If we break out, well, we could see price probably push to 102, maybe 103, even probably even a lot further. But yeah, USD, I'm not going to have such a strong bias just yet, just because I'm waiting for the dollar to make its move sort of. In terms of gold's been interesting, bearish today at least. For most of the week we've been bullish. Of course, we've opened up and saw a nice move higher. We talked a lot about gold on the stream last week, and I said we are looking for a short-term retracement because, of course, the previous weeks were very bearish. We saw a lot of momentum, but we found support here on that prior wick. And last week, Monday, we had that massive piercing wick through. And then by the end of the month, by the end of the day, price pulled all the way back and closed above that level. So that's a big indication to say that despite that selling pressure, buys still held their ground. So this was a very significant price point for gold. And since then, we kind of consolidated, then market shot back up. I talked about the 50% of that impulse as an area to keep in mind, especially if you're looking for longs. That could be a natural place to target. And you can see prices kind of headbutted that level pinpoint. Then we reacted quite bearish today. Now's the question: are we going to get a continuation of this bearish momentum, or is this just a reaction? Maybe some buyers taking profit, maybe some sellers joining the market. This doesn't necessarily mean continuation. It doesn't necessarily mean reversal either. So with gold, direction is a little bit as well. Despite that bearish momentum, I'm not just going to be forecasting this because there's not really much to support that narrative anyway, at least from my analysis. So I'm not looking for necessarily a big sell-off on gold. I'm looking to see what we do now that we're coming back into prior structure. Because of course we've had this swing here, we had the pullback, excuse me, and we had another swing here as well. So now we're coming back into territory where we could see more buyers kick in and potentially move back to that resistance. So this is where I'm kind of more bullish minded on gold, but I'm gonna let price justify that. At the moment we're kind of descending, not really seeing any shift in structure, but this is now bullish territory. If you're looking for sells, that would have been nice earlier today or yesterday. But now we're coming back into bullish territory. Now it's kind of, can we find support here? If we do, there could be another swing back up again. So gold, I'm looking for some short-term buys as we come to the latter stage of the week. Silver, a similar situation as well. If I go to the daily chart, I'm not too sure if this one hit the 50. If I draw the impulse from the high to the low. So yeah, not quite hit the 50. That one not as textbook, although I still do like price to come back to the 50, especially again if we can hold that that bullish area similar to gold. So again, you can see the market structure not as clean, but low, high, higher, low, higher, high. Again, we're coming back into this territory. If we can find support, that could give us another swing. And if price does break that low, then I won't be interested in longs anymore. At that point, we're probably going to see the continuation of that massive momentum we had a couple of weeks ago. So again, coming to another kind of make or break area. I do prefer gold, so that's where my attention will be, but silver, essentially a very similar setup, at least technically anyway. So I would keep an eye on that kind of 69, 68 area there as well. But again, USD is going to have its part to play. If DXY's break into the upside and we're seeing momentum outside that larger range we just spoke about, well, of course, that's going to be a bit more of a bearish sentiment for gold and silver, so keep that in mind. But DXY, at least in my eyes, isn't quite mapped out yet. I'll go through some indices. Hey, what's up, guys? Welcome to the stream. CS, Bashy, what is up? Hope you're all doing good. Martin, what's up? Yeah, so as I said with gold, I think some short-term buys look good in the area. Price is not really agreeing with that bias just yet. We're kind of just arriving there, but I do think that's an area where we want to be looking for buys. And again, if you were short, great, but I would say it's a bit late to be entering bit sells now. So in terms of some of the indices, I'll take a look at the FTSE as well. So yeah, indices have been pretty interesting, especially US 30. Actually, I'll start with US 30. I'll come back to the S&P. But US 30 is really, really interesting because of the level price rejected. So you can see prior highs over here. And essentially, if you look at the history, price did that very pattern on our last kind of massive retracement. So you can see US 30, this was 2025, sorry. Really big push down, respected that prior high. And then of course that set the next wave, that set the next continuation. Essentially, we're doing that again, of course, not confirmed yet. We still need to get the bullish leg, but we're testing the same area and actually seeing a pretty adequate rejection now. So I did say on my stream yesterday that I would be very bullish in US 30 if we can break highs. That for me is the last kind of sign of confirmation, because we've seen price come to major support, respected it very well. I like the way we've seen the momentum. It's not like a slow reaction or we've just consolidated. It's kind of a very fast, sharp reaction. The only piece we're missing is a break of structure, because that will tell us that, okay, price sellers are not effective anymore. The new buyers are coming are stronger. And that potentially could be the catalyst for now a bullish trend. And that could take us potentially back to highs. Again, just purely focusing on the technicals here. So I quite like what I'm seeing with US 30, but I would wait for that last confirmation break of the high. And then, yeah, pullbacks essentially from there onwards, as long as we maintain bullish structure. I like the longs. So US 30 is definitely something I'm keeping an eye on. Of course, today we are looking pretty bearish, but I'm just going to take it as it is. I'm not really looking to sell the market anyway. As we've approached massive support, I'm only looking to buy. If price breaks through, that's something else. We can discuss that later on. But if price does go and break structure now, that's something pretty significant. In terms of the S&P and Nasdaq, a little bit different for these two. Again, they've kind of been in ranges. They're not really testing major support like the Dow Jones is. If I zoom out to the weekly chart, you can see we've got a very similar high over here, which price is of course nowhere near at the moment. So we're not really looking at that in too much detail. But what I am looking at is price support here, because this is kind of our range low, sort of. It's not really a textbook range, but essentially on the daily chart, we found support there, we found resistance, and price has been in between those two levels for quite some time. And now, of course, we did get a breakout last week. And then Monday's, no, that was Monday, that was Tuesday. Tuesday, we saw a very strong push up. Wednesday kind of continued that, but Thursday's sort of disagreeing, at least as of right now. That could change. So effectively, the bias for S&P is going to be decided with how price reacts with this level, because if price does climb back in and hold support again, I'm very bullish on the S&P, and I'm looking for a push right back up again, at least to the midpoint of this range. So again, if I whip out the fib from the high to the low, that midpoint is going to be a natural place I'll expect price to drift towards. And then maybe you can discuss the highs as well later on. And of course, if the opposite happens, let's say price does end up rejecting this, well, we've got a clear target back to lows, and you've also got this corresponding high over there, which maybe price might drift towards as well. I would say this is essentially a bear market. We've seen consistent lower lows and lower highs over a span of time now. So it's the question is, are we going to continue being bearish, or are we going to actually flip? And yeah, if we can push higher, hold support, then I'm very bullish on the S&P. And the Nasdaq is pretty much the same outlook as the S&P as well in terms of the market structure. This one is slightly cleaner, more visually digestible range. It's kind of easier to see that as a range. S&P was kind of a bit more awkward, but yeah, clear range, highs, lows. You can see we've broken out, and this looks like a clean break and retest. I don't want to judge a break and retest on an intraday chart because I'm looking at this range on a daily. So I would wait for the daily to signify if we're going to reject the range or break back inside. And this looks like a solid rejection. I would wait for the end of the day to close. We've still got about 7 hours-ish before that does close. So things can change. But if we can close as a bearish engulfing like this, that would be a solid textbook rejection for me. As long as price does now not, of course, close back above, I'm looking at sales for the Nasdaq back to prior lows and to a similar area as the S&P, back to this high here. That becomes a pretty high probability place for us to come back to retest. So it's not looking good for the indices. At least technically, they're not looking good at all. Especially if we see confirmed break and retest outside of those ranges. The only thing for US30 is that I wouldn't sell it because technically there is no real setup on the daily that I like. The Nasdaq, clear breakout retest, very easy to kind of map out and understand. Same logic applies to the S&P. US30 is kind of testing support, so I don't really want to sell there. I'd rather us wait for a break of structure. So I'm going to keep an eye on that. Go take a look at the FTSE as well. I've not been focusing too much on this one, but we'll have a look-see. Okay, so the FTSE, pretty clean to be honest. Very nice trend. Of course, recently we've had a bit of a downturn, but it's not in the same kind of shape as what we're seeing on the US indices, which is kind of consistent lower lows and lower highs. Yes, the FTSE's kind of dropped pretty aggressively, not really flowing with some nice structure. And especially over these few days, we're coming back into critical resistance here. And if price breaks through that, technically I would be very bullish on the FTSE again, especially on a daily chart. And that high there becomes interesting again. So FTSE, interesting, big drop. It looks like price is respected to some prior support. Buyers have really stepped back in. Now we're coming back into an interesting area, which will dictate bias again. Because if we do hold resistance here, I wouldn't be bullish. We could just slowly roll back over. But should we see some momentum really push through this, clear out some highs, that for me is a very bullish setup. That looks like a big V-shaped pattern, which is a pattern I keep aware of. From my experience, they perform pretty well. Very powerful for reversal patterns. Essentially, you're looking for a very strong move down, very strong move back up of similar distances. And that normally resembles price going through a bit of a U-turn. So yeah, if we can see momentum break structure there, that fundamentally looks very bullish for me. Then of course I'll probably drop to like a 4 hour, find some pullbacks along the way, and that becomes a nice opportunity, especially from a swing perspective there. So if you can break the high there, take the highs there too, then this becomes an interesting area for a buy. So yeah, FTSE I'll be pretty bullish on. I'm liking the market structure, it's pretty clean. And I do think we can see a bit more upside there as well. So not a market which I pay attention to be honest. So it's not a trade I'll be looking to take. But yeah, I actually quite do like the price action, to be honest. It actually looks pretty nice. But it is contingent that we do break the highs and we see some follow through there. So keep an eye there for FTSE. In terms of some of the cryptocurrencies, I'm keeping a close eye on BTC. The longer we stay in this range, the more attention I allocate to Bitcoin, because Bitcoin loves a consolidation and it loves a breakout of a consolidation. And because it's so volatile and because the moves are so big, it actually becomes some really good trading opportunities. I mean, if you look historically, you can see a textbook set up there, consolidation, breakout, but again, consolidation over here. Eventually a breakout, consolidation there, breakout, consolidation there, breakout, consolidation. So it literally just repeats this a good chunk of the time. The skill is kind of the timing and the direction of the breakout, of course, because there will be many fake outs, not just a textbook. It's not a textbook, the first sign you get, the market's gone. But if you manage your risk well, the risk reward makes a lot of sense. So as you can see with BTC, we're spending some time here. So typically, just a rule of thumb in general, the longer we spend in consolidation, typically the bigger the breakout. So this is something which I'm very interested in trading. Once price makes its mind out, that it wants to get some continuation. Which direction? I'm still going to be very neutral. I'm not so much trying to predict the direction. It's more so just catching the breakout. If price shows signs to the upside, it's going to break. I want to take that. Same thing to the downside. So it's not so much kind of analytical, trying to derive which way price is going to go. It's more so just being ready and waiting for the right signs. I mean, with momentum being so bearish, I would favor another move lower. But equally so, if price breaks higher, I'm looking to buy that too. But yeah, I don't think Bitcoin's quite done yet with the retracement. So I kind of have an instinct we go lower. But again, I'm just going to wait for price to show when it's ready. At the moment, we're still very much within the range. So nothing really to do yet. We had a few attempts high, which is actually a good sign. If you can get some failed attempts to one direction, it does increase the probability we move in the other, but not quite at some entries just yet. So going to keep an eye. But yeah, in terms of trading, in terms of what I'm looking at, like I said, Euro USD, I'm keeping a close eye on that. Pound USD, we didn't quite get enough of a pullback for me to short yesterday. I said I was looking for some shorts coming into this week for pound. A very nice move down. I just didn't see the pullback as after. I was looking for price to come back into the midpoint of last week. Not too far away from it. Not too far away. That's where I would have been looking for some entries. But yeah, unfortunately, price didn't quite make it there, and now we're looking pretty bearish. I do think pound's still got some room to the downside as well. It's a bit more corrective now, a bit more slower, but the trend is still thick and fast, and support here looks pretty likely to be tested again. So pound USD to me, still very much a bearish market, and I'm still looking at continuation. But then again, as we spoke earlier in the stream, it depends what the DXY wants to do as well, because if the DXY doesn't give us the breakout, then I would expect this momentum to fizzle out pretty soon. But if the DXY breaks out, that changes everything. We might even go a lot further than this, because pound USD itself is ranging too. If I go to the weekly chart, you can see, price has got some equal highs over here, equal lows roughly down here as well. So effectively, pound USD is ranging too. So if the DXY does break out, potentially we could be seeing pound breakout too, and other markets, other USD pairs as well. And there is room to the downside for this to fall. You can see Euro doing something similar. Actually go to Forex.com. This is doing something similar as well. So you can see price there too, consolidating. If DXY breaks out lower, DXY breaks out higher, I'm expecting the Euro to break out lower. And again, a lot of room to move into. So there's some opportunities here, especially if you're looking for some swing opportunities. Again, day trading doesn't really necessarily matter because the market's going to fluctuate within the day anyway. But it helps having that directional clarity, because you know which trades to potentially hold a little bit longer and which trades to potentially cut. So yeah, with Euro, I'm going to keep an eye. Didn't quite get this opportunity up here. If we can revisit, that would be very nice, especially if you can push into last week's high. That's where I'm really looking to see if I can find an entry on the 4-hour chart, get a stop loss above the high, and then see if we can go and attack the lows here. Worst case scenario, well, not worst case. A good case scenario would be a pushback to support. Worst case scenario, of course, would be a loss. But the idea is if I can get a position up here, then I can trade the room back to this low and then leave a good chunk to see if we can get a breakout. If price looks like it's rejecting, I can kind of cut my winner and walk away from the trade. But if it looks as if we're breaking out, that's a trade which I want to hold, because I'll be in a prime position to really take advantage of that trend. So that's something I'm going to keep an eye. But yeah, no entries at the moment, so being patient. But yeah, I'm not trying to be looking at too many markets. I just want to find the best one I can find and just focus on that altogether, especially because when you trade like myself and you look at over 20 markets, it's easy to overtrade. It's easy to find different markets and say, okay, that looks like a trade, that looks like a trade, and just spam as many markets as you want. And then you look back over the week and you've taken 20 positions, and are any of them actually worthwhile? Any of them actually fit your plan very well? Maybe a few of them, but most don't, and the most are just not something you need in your trading history. So yeah, focus and quality over quantity is definitely is very, very important if you trade a lot of markets. If you just trade one, of course, then you're just trying to find the best trade there. But it's very easy to overtrade and distract yourself and become emotional if you're trading many markets. So the discipline is crucial. But again, looking at another USD pair, Aussie looking pretty bearish here. Lovely consolidation over the past few weeks. It looks as if price is now breaking to the downside here as well. So we're getting some kind of what's the word I'm looking for? Some information, evidence that USD is favoring that kind of that bullish side of things, because it looks like Aussie dollar's already starting to commit to the downside. Euro and pound haven't really, but they're looking pretty bearish. If we take a look at dollar yen, I mean, dollar yen's a little bit skewed because it's primarily just the yen weakness, which is carrying USD JPY. But of course, USD has been relatively strong as well. But yeah, it's mainly just the yen weakness that has caused us to be pretty bullish here. And that still looks true. So again, dollar yen is a pair which I want to be looking for longs. If we go take a look at dollar CAD, dollar CAD's a bit more awkward. It's a bit more 50-50 trading here. Sometimes CAD's a bit stronger, sometimes USD's a bit stronger, it kind of fluctuates quite a lot. So in terms of direction, I'm being very cautious about having a strong bias, directional bias for dollar CAD. I'm more so kind of just looking at where the areas of significance, where price seems to be finding resistance, where price seems to be finding support, and looking for kind of mean reversion opportunities in those areas, because this is not a market, at least currently, which is not really trending well. We trend for a bit, turn around, trend for a bit, turn around. So if you're looking at kind of trend following techniques, you're probably going to get caught buying too high and selling too low a lot of the time here. So the better plays is kind of mean reversion and just kind of picking the more significant areas, waiting for price to confirm rejection, and then looking for opportunities. And we're at a significant area right now as well. So this again looks like a really nice place for a short, especially if you can get a stop loss above the high there. Maybe potentially a bit of a double top could form. You could wait for a slightly more conservative entry, break of structure, then looking for opportunities there. But again, when I'm trading mean reversion, I don't want to be looking for the later opportunity, because as price moves further away from the significant level, the extreme, the less edge, the less opportunity there is. So I prefer to be a bit more aggressive with mean reversion, because the whole idea is that I'm placed very well. Whereas trend, I want to be a bit more, certain that the trend's actually there. So break of structure entries make a bit more sense. But yeah, dollar CAD, in terms of where I placed, I like the idea of shorts here. It kind of goes against my USD bullish bias, but it could be a nice kind of hedge if the USD bias doesn't work out, but then potentially dollar CAD shorts works out. And then finally, if you take a look at dollar CHF, another USD pair, this one has been pretty bullish. Effectively, it is bearish overall, but of course, over the past few days, been pretty bullish. Now we're coming back into highs. Again, similar to dollar CAD, could be a nice place for a bit of a short-term sell. Although I think dollar CAD's a little bit cleaner, so I'd rather take that one. But yeah, USD, like I said, it's in a very kind of significant place. If you break out, very bullish. If you fail, I'm actually going to be pretty bearish. So I'm not going to have a too concrete bias just yet until we make that move. But anyway, guys, we have come up to the end of my segment. So I do appreciate Nick and A1 having me on. If you guys have enjoyed my segment, feel free to check out my channel. I'm pretty sure they've dropped the link to it, so feel free to check it out. But guys, appreciate being on here. Have a great day. Have a great weekend, guys. And I'll catch you all in the next one. Take care.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
All right. Well, good morning, everybody. Looks like we did a little bit of a schedule change this morning, so I'll be hopping on a little early today. Turn down my volume so I don't get an echo. Just bear with me 1 second, gents, ladies and gents. I'm just going to get my pop-out chat over here so I can see everybody's lovely conversations. And yeah, as always, just pop in the chat there if you have anything. Big change. Hey, today's my haircut, Bashy, so y'all won't recognize me tomorrow. I'll be looking suave, hopefully. We'll see how that works out. But anyway, my cousin, he actually works for a barber. He does a really good job here in Kansas City area. So go holler at him and get a trim. So, all right, where are we at today? So, President Trump obviously had his address last night. I think for us traders and those of you guys that watch us quite frequently, I don't think there was any real new news that came out. I think it was just kind of a repackaged recap of what we already knew. But nevertheless, I think it was good that, the average citizen of all the countries that tuned in just to get an understanding. I mean, if you're not a trader, if you don't if you don't care about politics or geopolitics or whatever, maybe you have a 401k and you don't even pay attention to that. You just blindingly trust your financial advisor to take care of it for you, which is not a good idea. And that's why you're here, so you can learn how to do it yourself. I think it was good for a recap, just so everybody understands kind of where we're at. But yeah, he basically said 2 to 3 weeks, 2 to 3 more weeks of dogfighting out there. So as a result, futures dropped. Basically, we turned into a little bit of a risk-off environment, just taking a look from, kind of the top items. I mean, the VIX, this is your VIX right here. So just getting an understanding of the fear gauge. We obviously had a gap and a spike up there. The Dixie followed it as well. So did the 10-year yields. Okay. Yields are retracing a little bit as we speak, but oil, taking a look at oil, we did get a push up as well. Now as far as WTI goes, we pushed into an overhead supply. So this is a 2-hour supply zone I'm keeping my eyes on from back there at the early part of March. So looking to see if we possibly get a retrace after we bounce into the one hour confluence, which is that white dash line. We're not too far away from it. A little bit, still underneath the supply on Brent, but nat gas saw a drop. Gold and silver saw a drop as well. Bitcoin saw a drop. And then again, here's your gap downs that we're seeing so far today on the SPX, the NDX, and the Dow Jones. So that's just kind of your top level markets, taking a look at that. As far as, make sure I save that. Okay. As far as what I'm keeping my eye on the most is basically my favorites still remain the Euro dollar, the Kiwi dollar. And then I'm actually looking at a pound CAD possible entry as we speak. I was just looking at that before I popped on. So let's take a look at pound CAD. And then as always, guys, let me know what you're looking at. Oil. Yeah. Roger. We'll take a look at gold as well. Army cut. No, thanks, Bashy. I spent some time in the Air Force. So I had to go through that head shaving part and I didn't like it. We all look like a bunch of peeled onions after we came out of there. And then you get the BCG glasses. They call them BCG glasses. Okay. They give you all those issued glasses. They're called BCG glasses for short, but they're called birth control glasses because you get the women come up to you and they do an about face and go the opposite way. So that's what they call BCG glasses. I look like a peeled onion. It was crazy. Pound CAD. Yeah. So this is the one I'm keeping an eye on right now. Let's go find that right here. So just a little bit of top down look at it from a daily. Okay. Remember we kind of been bouncing in this overhead supply quite a few times over the last couple weeks to where we finally got a little bit of a roll down, not anything too crazy. Going into a 4-hour chart here, you can see we bounced into the 4-hour confluence part of it. We actually bounced into it back here. So as far as I'm concerned, when it came back into that same zone here, it's been mitigated. So I'm not as scared of this zone possibly flipping it and pushing it back down below as I was over here when it bounced in the first time. When it bounced in this zone, yeah, we did get a push down, about 100 pips. but it's not like it pushed it all the way down. It's not like it pushed it all the way down to these, cheaper discount zone, cheaper demand zones. Instead, we pushed down about the midpoint of that. If we just imagine a curve analysis from swing low to swing high, okay, we basically came down to about the 50% mark, or 50% fib retrace. And then we consolidated and we made another up move. So in the wake of that new up move, it kind of created a new demand right here. So this new demand broke structures here, broke structures here, broke structures here. It ended up barely breaking this structure over here that mitigated that overhead supply. So I say all that to say that I'm basically looking at this price action through here as kind of my impulse leg. So if I'm looking at an impulse leg, I want to find a cheap place to buy or an expensive place to sell if I'm shorting it. So for me, really the origin of this impulse move, the origin of this overall strong move, I think presented a decent zone of demand right here. Now, if I have to, because I always look at this as a contrarian, even my own trading strategy, I'm always looking at it as a contrarian. Well, now how can this go wrong? If I get into a trade here, what would cause it to lose? And right off the bat, it's quite simple. Very, very skinny gap. So it's not really that big of an inefficiency. That's key number one. And then number two is our VSA, our activity, our institutional pushes. We didn't get that. Okay. So yes, we had 4 green candles come out of that. So I do like that, but it's not like they were expanded range candles. Okay. They're not like, it's not like they're very strong. They're basically average looking candles. If we look, over here, they're just basic candles. But it's 4 straight 4-hour candles, 4, 12, 6. That's 16 straight hours of pushing up, albeit on the slow side. But it did break structure. And this big, bad 4-hour daily supply zone confluence wasn't that big or bad at all. Because if so, it would have pushed price all the way down to the next higher time frame demand. It didn't. It just took it down to the 50% line, created a new consolidation and a new push up. So I'm keeping an eye on it right now because we've obviously bounced in. Reset this real quick. So basically I'm right here thinking, okay, we got a bullish candle here. We got an RSI that dipped below 20. We've got a 50 EMA that remains above the 200 EMA. So there's my mechanical moving average signal I like. So I've got about everything here I like. Now, this was my first bullish candle, but I didn't feel the greatest about that, because it's not like it was big either. It's just overall kind of weak. But we finally got this big green candle here. So at the end of the day, talking about second chance opportunities, and I didn't quite see this when it happened because I was writing up my article on FX Empire. We did kind of bounce into, I guess you could say, a little bit more of a newer demand. This is getting intricate, guys. This is really digging into the weeds, but I mean, this is what I spent 12 years studying, is all these intricacies. And I kind of look at this as a little bit of a second chance opportunity right here. Right there. Okay. So we've obviously bounced in, but I would really like to see the volume start picking up a little bit more than what it's doing right now. So if I get a break of this candle, which was the 1-hour candle, then I may be interested in taking a little buy. So I'm just going to put an alert there just as a momentum buy out of the demand zone, if that makes sense. A break of structure push up. So that's what I'm going to do. I'm going to put this alert here. As always, guys, not financial advice. You hear us say this ad nauseum. This is just where I'm looking. It's just a point of interest I'd like to see. If we get a push up, if we get our VSA start picking up, then maybe taking a little long on this. So we'll see. And then just to finish and put a bow on this idea, obviously a take profit would be up here at the origin of the strong move down. So we'll color that green. We'll thicken it up a little bit. Okay. What's 2 divided by 1? Or what's, let's see here. What's our risk? Okay. So our pips, our profit target is 120 pips away. 120 divided by 2 is 60 pips. So that would put me down here underneath the swing low. So I think that's a fairly comfortable, trade idea. Again, not financial advice. You guys are all adults, but that's where I'm looking right now. That's basically a 2-to-1 opportunity. So that's the one I'm looking at as we speak. Now, Kiwi dollar, euro dollar, I'm looking at some short ideas over there as well. They're just a little further away from the zones. Yeah, you can see here, I got a zone up here on Kiwi dollar. Still a ways away. A little slower moving, by the way. Kiwi dollar and euro dollar up here. But I am keeping an eye on a couple supply zones here as well. All right, let me take a look at the chart. You like my shirt? Ketchup, relish, mustard. I mean, I'm going to get some new shirts soon. Don't worry. Euro dollar, says David. Yeah. Just looking at that euro dollar, obviously, Edge Finder. Okay, that is our number one bearish asset, tied with the Kiwi dollar. So it's looking really good. Okay, that's all. As always, that's my boss. Edge Finder is my boss. It tells me when I can or can't look at a chart. Chart's the last thing, guys. If we get a fundamental and a sentiment reason to look at a chart, then the chart's last. Okay, so that gives us permission to look at it. Overall, I would say, let's go to a daily real quick. Okay, so daily, so I got my 8 below my 21 EMA. That's a good sign. It's down overall, but sideways, pretty much sideways the last couple weeks or so. So if you're a sideways trader, okay, a lot of sideways traders are going to be trying to buy down here and sell up here, right? Real simple. Well, we want to short this. So the zone I'm keeping an eye on right now is this one here. But I got to be honest. If price were to come up into this zone right here, I would not put it a full position because that zone was not even strong enough to push price below these lower levels of demand. If this would have happened, this would have been a full position right here. But because it hasn't, this might be a partial position. I still would prefer that price comes down a little deeper first, though. Okay, I really would. I'd like it to come down, not quite to the demand, but just close. I'd like it to flirt with it a little bit. Because this would be a stronger looking push down than where it's currently at. I just don't think that's very much mojo. So ultimately, this is my favorite idea. This is my second favorite idea. And this is currently where it's at now is the third idea. The further price goes down before retracing, the better I feel about a more regular risk. Okay, what I would call my regular risk, which, as always, guys, I don't get too crazy with it. I tend to stay anywhere from about 0.3 to 0.5%, because I want to be here 10 and 20 years from now versus win a couple big trades now and then turn around and give it all back, wagering 2%. Okay, standard average, you hear in all the textbooks, you hear in all technical analysis books, 1 to 2% is what is the best, the max that you should be risking. I think it's even lower than that. That's just my thoughts, my beliefs on it. I just think, when you look at the math of placing trades on 1 and 1.5 and 2% risks, well, just figure out how many losses in a row it takes for you to blow your account. And then once you get really much, once you get really big into a drawdown, well, then you got to double it just to get back to break even. It takes a lot longer to get back to break even than it does from break even to be increasing your profits, if that makes sense. So just a little tougher, guys. So yeah, that's what I do. British pound still bullish fundamentally. Yeah, let's have a look. Hair across, since you brought that up, let's have a look at the currency index for you guys. Let me refresh this real quick. And let me see here. Let me just double check something, guys. Okay. All right. So I got it. I'm going another 10, 11 minutes. Okay. So yeah. So the dollar, guys, and we'll talk about the pound in a second. The pound, by the way, is at 40%. So this is where I would start looking at these currencies as a little more on the bearish side. I kind of just, in my head, look at 40% or lower. And I don't know how I'm not quite sure how Nick designed that, but for me, 40% or lower would be bearish. 60% or higher would be bullish. In other words, hey, I want to go out and actively try to find a way to sell that asset. In other words, the pound in this example, or buy the dollar, since that's the only one that's 60% or higher. But yeah, if we just take a look and isolate the pound, since you're asking about it, we'll just take a quick look over here at the UK heat map. Okay, so we've had a neutral growth, a GDP report of late. Yesterday, we did have a bearish MPMI number, and then on the 27th, we had a bullish. So a little bit of mixed data of late. The pound is kind of fallen from grace. Guys, remember it was 80. It was showing us an 80% score at one point. And oh my, how quickly things can change. It's went from 80 all the way down to 40. I think it was 80, wouldn't it? Oh my gosh. Never mind, guys. I had the Aussie in my head. No, that one was weak from the beginning. So scratch that thought. Yeah, either way, to me, just to kind of wrap that up, it's just barely on the I want to go out and sell the pound mode. And we're really in a state of economic underperformance if we're taking a look at all these top 8 majors anyway. Because everything is right at about 40 or lower, except for the dollar. I was a little worried about the dollar this morning until before we had the unemployment claims number came out. Now, it came out good, but, I was sitting there thinking, refresh this, if we would have gotten an ugly number over here, well, that would have dropped the dollar well under 60%, kind of back to neutral. But thankfully, we had a good number. So far, the Dixie, as we just saw, is still a buyable asset. Now, it's also being aided by all this geopolitical turmoil. Okay? Take a look at the Dixie ever since this war started. Which direction has it been going? Now, it's been aided by a lot of the good economic data, okay, the economic calendar data. But it seems like with every heat, spark over in the Middle East, this thing just continues going up and up. Right there with oil, right there with the yields. So anyway, that's kind of the look on the pound. But if we just kind of match that up, or just take a look, yeah. So currently, and see, this is where I'm a little hesitant on some of these British pound buys, is just because they're giving us very bullish signals. In my head, I focus so much harder on the fundamentals, the fundamental strength score of the currency. Even myself, I have to tell myself, okay, you got to look at it as a whole. You got to look at the sentiment. You got to look at the technicals. But for me, when I thin everything out and I look at true strength versus true weakness, for me personally, it's the euro dollar and the Kiwi dollar. Because again, the dollar is the only fundamentally strong currency that I see. Get my thing to work here for a second. So yeah, that really leaves us with dollar yen, dollar Swiss, and basically the dollar pairs. That's my personal favorites. So on that note, we had pound CAD hit. Look at this, ladies and gents. All right, we're testing that. Okay, so there we go. We're starting to get a little spike above the 1 hour candle I was looking at on pound CAD. So this may be a potential buy here in a moment. I'll do this off screen here in a little bit, but that's basically what I'd be looking at right here. Okay. As always, to protect our behinds. Okay. Not financial advice, but that's the play I'm looking at right there. Bam. Got a protective stop underneath major structures, taking profits at the top, trying not to get greedy, because at the end of the day, we still do have the shadow, the ghost of this mitigated, 4 hour daily supply zone confluence up here. So might be popping into this here in a moment once I get off the chart or get off the stream. As far as just taking a look at a couple of these others. And one thing I do want to mention, guys, just keep in mind, there's always the code, the 35% off code from Nick for Ola Prime. If you guys are interested in checking out another prop firm, A1 Live is the code. If you manually punch it in on olaprime.com's website, or you can click on the QR code that you see right there. If you guys ever have any thoughts or questions on on that firm or anything, just know that I used to work there. Okay. I used to do content creation there as well, moderating. I used to help people with the challenge rules. So you can always hit me up at Trade Like a Tiger on all the socials. I'm on all the socials, and just drop a message if you have any questions on that or whatever. Supply, demand, market structure, the war. Okay. I'm one of those nerds that sits on my computer on the weekends, especially, and just kind of gets updated on a lot of stuff that I can't really focus as much on through the week because I've got a job now alongside my trading. So I'm pretty well in the loop for the most part. I'm nothing like Nick. He's way, way better than me at comparing and contrasting the differences of the fundamental side of things. But when it comes to the technicals, I think I can hold my own pretty well. So that's really where it's kind of funny. That's where I focused the first decade of my trading on the most, was the technicals, only to learn a decade later that that's the least important part of the analysis. It really boils down to the fundamentals, really boils down a little bit less, but still very important on the sentiment. Talking about the retail sentiment, the COT report, the smart and the dumb money relationship. But again, and we say it periodically, guys, when we're watching CNBC, when we're watching Bloomberg markets or whatever legacy financial news that you're after, we're talking about the relationship with all the data, the hard data, not numbers necessarily, but hard data. So, and it's very evident how markets can react even on not hard data. Like last night, President Trump's speech. Did we learn anything brand new? Did we learn anything brand new last night? No, but the market reacted in a risk-off fashion on really no new data. So it just goes to show you that rumors or that words move markets, especially President Trump's, especially, premiers and prime ministers and central bankers, obviously. But at least the central bankers are working off of data. Not all the time are the leaders of the nations following data. They're following their gut or their wishful thinking or their whatever, right? So anyway, just be careful with that. My chart looks like a spaceship. What does that mean? How does my chart look? Yeah, I get to putting all kinds of crazy drawings up here at times. All right, guys, I got a few minutes, so I'm just going to take a look at a couple of these dollar-based pairs real quick. We've already went through Kiwi dollar and Euro dollar, so let's look at dollar Swiss, because that's another bullish signal that we're getting. Swissy obviously is still the weakest currency, I do believe. Is that right? Yeah, 16%. Wow. Swissy's not doing good at all. Now, for the dollar Swiss, I think we're in a little more of a premium zone, talking about the upper end of a curve, okay, upper part of the curve. If I'm looking at curve analysis, I'm looking at swing high, swing low. So we're a little expensive, in my opinion. For me, I had an alert down here, but in light of this recent movement since Trump flapping his lips, I'm actually going to move my alert to this zone right here. I think that's a pretty decent looking zone of demand right there. And the other thing that's helping this out is the fact that if we look at our VSA candle, it's a nice big yellow candle on that leg out. So strong volume spread analysis push, strong gap showing the inefficiency in the market. And as always, when we look at swing lows and swing highs and we find the farthest inefficiency down, we look for the demand and thus the unfilled orders for possible buys. That's supply and demand 101 right there. Okay. And by the way, and I'll end it on this. One person, if you guys are interested in seeing where the heck I got all of my knowledge for supply and demand, go on to X and type in Sam Seiden. Okay. This guy right here, this was the head trader or the head trainer, I should say. Well, first of all, he worked on the floor of the Chicago Mercantile Exchange, but he's the one that came up with like the overall strategy as he saw it as a trader on the floor of the exchange. So this is really where the supply and demand comes from. If you guys want to go find him, just dig into him a little bit. Again, he has he's got a new setup, I think Pinnacle Institute or something. I don't know a whole lot about it yet. I just kind of reconnected with him myself, but this is a great guy to follow. You can find his supply and demand material all over Facebook, all over YouTube, But this is basically where it all started for me. So, there's a few other people I've kind of followed along the years, but at the end of the day, we take bits and pieces from everybody. Take bits and pieces from me. Take a big piece from Nick, right? Take pieces from all the other guys that are on here, sharing material, and make it your own. Maybe you don't connect with me. Maybe you don't connect with one of the other guys. Maybe you don't connect with Nick. I don't know how, because Nick's like the coolest person ever. But if you don't connect with one of us, figure out who you connect with, and just pick what you can from them and make your own personal algorithm. That's really how trading works. That's really how it's evolved. We don't want to do everything one person does. We want to have our own opinions and our own views. So I'll leave you with that. I know it's the end of my show, but with that, have a wonderful day. Stay safe, and I'll be back tomorrow.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join.
Alrighty, good morning, everyone. Hope everyone's having a fantastic day. To my surprise, we wake up today and markets are really moving here. So let's go ahead and talk about that and see how we navigate that. For one, the chart behind it all is going to be oil here. There was an address from President Trump last night, and markets were pretty much expecting him pulling out somewhat. I think those were the comments leading up into the event, saying something along the lines of, he's willing to pull out of the war even if the strait remains closed. So I think markets were anticipating that. And it was the complete opposite. I think he said something along the lines of that he's going to finish the job, something like that, very escalatory, however long it takes. And so markets repriced very, very fast there. So you're seeing oil here up 12% on the day, one of the big movers here, now getting close to that 120 handle. Not quite there yet, but it's looking a lot closer than it was a couple of days ago. So that's the big reason behind it all. Also too, right, stocks, everything else, yields is the big story there. So looking at the short end of the curve across all of the major countries there, you do have Eurozone, Kiwi, US dollar starting to creep up here, Aussie dollar as well. And so I think that's going to be the main driver. I think also, too, one of the not weirdest, but an interesting dynamic is that markets are going to be closed for about 4 days, depending on some markets, right? So a lot of people may be just taking risk off the table leading up into that Easter weekend. For those that don't know, in the U.S., well, I think it's a worldwide thing. Why am I saying that? But there's that holiday weekend where a lot of banks are going to be closed there. And so I think markets are starting to liquidate ahead of that event there. But again, the same thing that we have seen, for this whole conflict really is that markets rally leading up into or in the beginning of the week, and then come the end of it, you just fade all of that progress there. So kind of what we're seeing there today, in my personal opinion, you would need to see something close above the 200-day moving average across the major equities. So S&P 500, right? Each one of these green bars here is a Monday, and then come the end of the week, it's all gone, right? So same thing this week as well. It seems like we still have a couple days left. We still have what's today, Thursday? Yeah, so we have Friday left, but again, you're under that 200-day moving average, which by definition is technical structure there. So unless we get a break above and hold it, then this is still a bear market, in my opinion. I mean, this is just a clean look to the downside there. Nasdaq as well under that 200-day. Dow Jones tested it yesterday, now trading lower there. So don't be fooled. Traders were very optimistic yesterday and the day before, and they were very disappointed. So again, just wait for that technical structure. This thing can continue to be ugly, especially if oil remains elevated, right? This is only the first couple hours after that speech. If oil does not calm down and it continues to even hover around this area, let's say it doesn't even go higher, but it still hovers around the 112s, 100s, 110 above that. That is not good for the inflation story. Yields will go higher, rate probabilities will shift, and you will continue to see equities to bleed, right? Maybe you have a big gap down, who knows, right? But essentially, that's what it is. So trade safely, guys out there. If you're trading these markets, don't get too optimistic too early. It will really hurt you. Hey, Bashy, how you doing, man? They can do more manipulation when banks are closed or off sessions. Technically, they can, but I would argue they can always do shady stuff. When it comes to institutions and stuff like that, they can trade on the weekends, they can trade after hours, dark pools, whatever the case may be. They'll do what they have to do, right? So one thing that can happen is an intervention from the Bank of Japan. They tend to do that on holidays where banks are closed, but again, you do have a strong dollar here today, so intervening into some dollar strength is not the wisest thing. So I doubt that's going to happen. And speaking of dollar, there you are seeing the dollar index here pivot from that 99.500 handle there, that level of support, which I had marked up. I was pretty curious to see if that happened, and it actually did. So, I was kind of expecting a deeper pullback if you were to get more optimistic. But we didn't, right? We just pivoted right there, and we're going to probably test that 100.5 handle. Most likely than not, we'll probably see that by Friday. Who knows? We've actually been seeing some good data here out of the US, if I'm not mistaken, as well. Which has been good, right? We had good retail sales, if I'm not mistaken. ADP yesterday came out good. Jobless claims came out good today. So despite all of that, like the US is actually pretty resilient. So I wouldn't be surprised, honestly, if you continue to see oil elevated, yields higher, that the dollar continues to get bid, and you actually can get a break and retest above this 100.5 handle there. I actually think that's very, very probable now, especially after yesterday. So I'll be waiting for that, right? I did take that the euro trade short with Nick there yesterday. Ideally, I was going to wait for that 50-day moving average, but again, this technical level right here, this resistance look very, very clean. Very much agree with that. And I took my profits here at the 50% retracement level. So what I did was essentially, because I didn't know if it was going to continue lower or not, right? So I took the conservative approach as far as taking profits go. So I shorted here, and I thought to myself, where can I take profits, right? So I put myself in the perspective of a bull of euro dollar and put a fib. And I was like, okay, well, if I'm bullish on euro dollar, I'd probably look to enter long at the 50 or the 61.8. So I just chose the 50, in the middle between all of these retracement levels. And so I got taken out there. Now, given the update in what's going on in the Middle East and everything like that, I'm continuing to be, dollar bullishness, right? So what I'll probably look for is some kind of retracement somewhere. So if I put a fib from this recent high to this recent low, maybe I can re-enter somewhere around 1.15680, the 68% retracement level, anywhere like that. Or if we can somehow manage to get back up into this level, but I kind of doubt it. So maybe I look for something like this to go ahead and re-enter euro dollar short. Again, it seems to be like this is the playground that we're going to be in during this whole escalation, is this whole channel here, 1.1600 or 1.1605 and 1.1400. So pretty much where we're at here. So I'm trying to get as close as I can to the topper end of this range. Again, you don't want to short or buy when you're in the complete middle, because it can go either way, right? You put yourself at a lot of risk. The risk to reward ratio is not there. A lot of reasons, right? So I'm trying to wait for a pullback up into the euro dollar to the upside there so I can short it. But I do like the overall trade there, dollar bullishness. And if I go to the edge finder and I go to euro US dollar, I believe it is still bearish. Yeah, -10, very, very bearish. You can see it's been very consistent for the whole time of this war. So I love to see that. And for those that don't know, this is the the edge finder here. I use this for my trading. It has been phenomenal. This thing has paid for itself many, many times over. I definitely recommend you getting a copy of this. And I think it's on sale too. I think it's 40% off for the edge finder and possibly the other products as well, like the VIP signals and all that good stuff. So if you enjoy Marco's commentary and stuff like that, he does his signals. He's been doing fantastic there in that sense. Nick as well has been hitting home run after home run, though it's not, forever, but, definitely, for if you're looking to navigate this, very complex market with people that are proving themselves, that are profitable and stuff like that with track records, go ahead and join the VIP signals as well. It's also on sale there. So go ahead and do that. But yeah, euro US dollar here looking very bullish. I like to see that. Another one that I would like to participate in would be Kiwi dollar short. I did miss this one. In fact, I think this is the better one in my opinion. But yesterday, you didn't get as deep of a pullback as you did in the euro. So the euro, from a technical perspective, was a better trade. Kiwi dollar, I think, is a little bit weaker there. But again, I'm not going to be too selective. You are, again, similar to the euro dollar in the middle of this channel here, this 0.5800 and 0.5500 there. So again, you don't want to just short or long, depending on your bias, in the middle of this channel here, because it can go either way. Again, the risk to reward is not there. So if we can somehow find our way back up into this upper end of the channel there, I'll look to continue shorting the Kiwi dollar. I love that trade. As far as my yen pairs, I do have 3 pairs open here. Dollar yen to the short side. I'm basically speculating on an intervention sometime soon. Again, this is very speculative, very low risk. My wide is 200 pips. My take profit 700 pips away. Again, this is a very probable case that if nothing happens here and you continue to see dollar strength in the picture, then this dollar yen trade will actually be taken for a loss there. So just so you guys know, right? Definitely be mindful of the risk there. CAD yen, I'm short as well. You can see that it's break even as well. I have 400 pip stop loss and a 900 pip take profit. And Swiss yen as well seems to be break even. That one has a 376 pip stop loss and a 713 pip take profit there. I did see, though, from the Swiss yen perspective, I do like it. I think it can. I think if I were to close dollar yen, that's going to be a safe bet. But Swiss yen, you can see here that during this whole escalation, this whole war, the Swiss has been weakening against the dollar. So if you continue to see that theme, I think Swiss yen will be pretty flat. Also, the yen too, pretty flat there. So I'm open-minded to keeping this trade running. From a bearish structure there, you can see that we broke this upward trend line here. We're above the 50-day moving average. So I like to see that, right? That bearish confirmation. We did break this level here of support. So this could probably turn resistance. We'll see how it closes. I do like that trade a lot there. You're getting positive swaps as well. So definitely a good trade for my opinion. And you do kind of have like an invisible upside cap to this chart specifically, because you do have the Swiss National Bank before the war started. It said, hey, we don't want the Swiss currency to be too strong. We're willing to intervene to weaken it if it gets too strong. And then you also have the Bank of Japan saying, hey, we don't want this currency to be too weak, so we're willing to strengthen that. So for this chart specifically, you kind of have like those two central banks working in the direction of bearish there. So I do like to see that. And also, too, last night we did see Swiss CPI come in lower than expected. So that's bearish for the currency. So definitely working in that direction. In fact, if I go to macro scanners here, I'm sure that the Swiss got a little bit weaker there. Now we're seeing 17 on the Swiss, meaning that most of their economic data releases are coming out unfavorable to the Swiss. So love to see that there. It's gotten weaker. It's actually the weakest one out of all of them. You can see here at the very bottom. So fantastic thing to see there. So I do like this trade here. So I'll probably keep this one open. I'll be mindful of dollar yen, just because I do have the luxury that it's at break even right now. And if you continue to see higher oil, higher yields, higher dollar, most likely than not, this thing goes into some drawdown. So if I can avoid that, I'll avoid that and wait for a better time. But again, this is break even. So I'll just manage that one with discretion. We'll see how the week progresses. If anything, I close it out by Friday. But, that's kind of the case there. CAD, same thing. The structure is pretty bearish there. You are also at break-even territory, so I can manage this one with discretion as well. So we'll see. But Swiss yen, again, I'll go ahead and leave that one open. I think that's a good trade there. Okay, Alan, recession clock is ticking for oil importing countries since Trump said it will be another 3 weeks. How will you trade dollar crosses? If they go down with you? Yeah, man. Like if I can get a pullback off main, I would try to short the euro and Kiwi. Those are my two preferred ones. There's a lot of things right now in favor of the dollar. You have the safe haven bid. You have the higher yield story, right? It's a higher yielding currency out of all of them. The structure, the economic data behind it too. Like, dude, you're seeing today. I don't think we got a single miss in the economic data releases. Now we do have unemployment and NFP tomorrow, and I think another important one as well. So if that continues, you have all stars aligned for the dollar, and if you get a breakout of that 100.5 level, I think that will really show some momentum. You have to think about it too. We've been trading within this channel for a very, very long time here. So this is like momentum building. You have this above the 200-day moving average. These are looking to go ahead and cross here. So this is the 200-day and the 50-day. If this one crosses below, if the 200-day crosses below the 200-day and they start to creep up, that is momentum building there for the upside. So off main, to your point, yeah, it's all things are aligned for the dollar. I'm looking to go ahead and participate by by shorting the euro and the Kiwi whenever I get an opportunity. Okay. Martin says, can you talk about oil? Considering Trump's speech yesterday, since he talked about attacking Iran with 2 to 3 weeks, would oil still rise, you think? You know, I think the markets have a timeline of 2 to 3 weeks. Maybe I think it would need to be something crazy for it to breach 120, right? Like when you think of a market extreme, for example, this right here, markets essentially price that in for a certain reason. So you would need to see something different or worse for you to get past that level. So we'll see. I mean, we're pretty up there right now. Maybe what would cause that would be the U.S. striking Iran and Iran actually aggressively striking back, and you have like a full-on thing where you can't just resolve it in 2 to 3 weeks. Then oil can definitely go ahead and shoot higher. I think that's a definite possibility, especially now. So Martin, and if you see that, Martin, then yields higher, oil higher, stocks down, just ripple effects across everything. So definitely be mindful of that. Aussie CAD. I can go over Aussie CAD here real quickly. I do have my friend Marco going to join me here. Maybe we can talk about that together. Marco has some insight here when it comes to the Australian dollar. He follows a gentleman named Brent Donnelly, and he has some really interesting insights. He actually warned me about the Aussie dollar, right? When I was very bullish on the Aussie, he shared something with me that was very interesting. And now you're starting to see actually the fundamental landscape underneath that Aussie economy starting to shift. So you can see here, at one point, the Aussie dollar was like the second strongest currency when it comes to the major currencies, right? Now you're starting to see it come dropping a little bit to 33%. So it's starting to not be as attractive there. And you can see that with the economic heat map as well. And again, everything that I look over when I base my trades off of, it's fundamentals underlying. You can see everything here in real time. Economic heat map, currency surprise index, all that good stuff. So definitely go ahead and get yourself a copy. But here we have Marco here. Maybe we can talk to Marco about Aussie CAD and the nuances with the Aussie dollar. Hey, Marco.
Hello. How are you doing?
Pretty good, man. We woke up to some moves.
Awesome. Yeah, Trump had a speech, moved the markets a lot to the wrong direction for him at least.
Yeah.
So yeah, we talked about like what can Trump say to save these markets. There wasn't much, but looks like he can say something that's going to move the markets lower, meaning risk off, meaning oil goes up, which he did yesterday. I'm not sure what the words meant exactly. Is it like a preparation for a ground invasion? I think then the next catalyst that would move the markets a lot would be a ground invasion. I'm not sure what else we can get to like spike oil prices above the recent highs. So I did take 50% off just now. If you're in the A1 Discord, you would have gotten the notification. I took 50% off at 111. I trailed the rest with the stop loss at 95.71. And if you want to join the A1 Discord, get all of my trades, you can do so with the code Marco. So I'm looking at this. I'm asking myself, what kind of a catalyst should we get for oil to go above 120? And I think boots on the ground is like the only answer, or a prolonged conflict that lasts for, let's say, the next 1 month, 2 months, 3 months, because all of the oil shortages are starting to arrive just now. In the last month, all of the ships that were delivering oil were still in transit. Now those ships did their deliveries, meaning they should come back for more oil, but there's no oil to come back to. So the shortages are finally starting to hit. Plus, a lot of the surplus has been used up, meaning there's no more surplus. Meaning any sort of let's say an escalation in the conflict could have drastic consequences on the price of oil.
Yeah, I think we did cross the 1 month mark already. Anything beyond that can be very, very painful, like you said, for other reasons. Yeah, I think you'll know really, really quickly, kind of like the future outlook, right? If this thing progresses, the war, then, kind of just like expect the worst, I would say. And if you see anything different, which I'm starting to kind of lean in the camp of like, maybe it's, I've been very optimistic in especially this week. And I'm starting to shift a little bit to neutral to pessimistic a little bit. So we'll see. Yeah,
tough.
we'll see how it happens. So someone said here in the chat, I'll go ahead and address Othmane. Alan, am I reading the pound is choked between super slow growth and high unemployment and inflation, which keeps the BOE unable to hike rates? Yeah, you make a great point there, Othmane. That is no doubt here. And you're starting to see the pound fall suit with the euro dollar there. So the only thing that kind of supported it, I would say, was the optimism factor. And the fact that you're starting to see a little bit of improvement there when it comes to like the retail sales not too long ago. GDP came in flat, but still weak. And inflation there ticked up higher there. But again, I think the reason why the pound was shooting up here in the last 2 days was taking account to that new improvement data, but then also to the idea that you may get some kind of a de-escalation. Now, obviously, that has been wiped off the table there, Althman. So I agree. The fundamentals may take a backseat, and the real driver following the price action will be what's going on in the war and the implications behind that.
Yeah, and also if we look at the S&P, so if I bring out the S&P, we're starting to get the same cycle again. From the 2nd of March, which is here, we had bullish Monday, possibly bullish Tuesday, and then sold off later down the week. Today is Thursday, so we thought that the pattern was going to break, but we may still be in the same pattern because the channel is still present right there, sort of the channel that we are moving in. Bullish on Mondays, then we sell off. That's been the pattern. And one thing that I mentioned yesterday is let's monitor for this week. Will the pattern continue or will the pattern break? Also, I was looking at gold. If we bring out gold was starting to catch a bid, starting to go up. Now, in a bit of a hiccup, it's acting like a risk on asset. So that's one more thing to monitor. I think this week we're going to, when this week ends, we're going to get a clear picture of, is the pattern going to repeat? Are we still mostly risk off, or are things starting to improve? And it's all about the S&P and gold at the moment, at least for me. Are you watching something specific?
I'm going to continue to play the, I would say the obvious trade for now, at least, which is going to be long the dollar. So I like to participate with that by shorting the euro and shorting the Kiwi. I did actually follow Nick's trade yesterday, that signal, and I took it off the table here at the 50% retracement level for the bulls. Awesome. So I'm looking to go ahead and wait for a pullback opportunity to go ahead and continue with that trade. In this environment, like sometimes it's better to not overcomplicate it. And if you know something that has proven to work in this environment, I would kind of follow with that. So that's kind of my thought process, Marco, is like continue to short the euro, the Kiwi, whatever is weaker, whatever presents a good technical entry, I would say to go ahead and go with that. But right now with the euro kind of like in between this channel here, it can go either way technically, right? So the risk to reward is not there. So ideally, if I'm looking to short this thing, I want to trade it towards the upper end of this channel, maybe somewhere around here, that 1.15800 or in the 1.16, somewhere up there.
I mean, you definitely have the confluence of the ECB getting hawkish into an oil shock, which never ends well. We had like three cases in the past. So I'm with you there. I think EU goes lower or ends lower by the end of the year. I'm not looking to place a position at the moment because from my research, the positioning on the US dollar is heavily crowded to the long side. So I'm waiting for some more evidence and some more, let's say, development in the price. But selling EU, selling AU may not be such a bad play. So I did get out of my EU short for break even. I'm still happy I got out. So yeah, for now, my main focus as far as the risk off play, I'm long oil. And as far as the other positions, UJ I'm short, which is again rejecting off of the 160 level. Funny how that works. And Swiss yen starting to go down as well. You mentioned we got some weak numbers out of the Swiss.
Yes. So last night or early morning, depending on where you're at, CPI came in weaker for the Swiss. which
Okay.
only helps the narrative of a weaker Swiss there. So, and to
Mhm.
answer someone's question, Perry went ahead and said, I just joined. Any update on Swiss yen? I like to trade. I like to trade. I have the luxury at the moment to manage dollar yen and CAD yen with some discretion because they are at break even. So depending on how I feel, I may close this for break even, just because if you do have a continued escalation, what that would do is raise the dollar. So dollar yen probably will go and draw down there and raise the Canadian dollar as it's kind of pegged to oil there. So um,
Mhm.
I can use discretion on those. I mean, right now they're just in break even, right? So it doesn't really affect me there. So, but when it comes to the Swiss yen, that one I would actually be very open minded to holding it for as long as I need to. Marco and I
Yeah.
have talked about the central banks kind of working in favor of the direction to the downtrend. You have the
Yeah.
technical structure confirmation there that we haven't seen ever with Swiss yen. You're below that 50-day, and you've broken that upward trend line here. And if I zoom in here even more, you do have this technical structure here that we've broken once. We've traded back into it, and we'll go ahead and see how it closes. If it closes below, even better. But so far we've been trading underneath this trend line and this 50-day moving average. So from a technical perspective, it seems like it's starting to work out. And then as far as the swap costs go, this is the only thing that you can trade against the yen short side that you can actually collect positive swaps. So when you're thinking of
Mhm.
people that are looking to participate in this trade from an institutional level, they have lots of money that they have to deploy, and they very much consider the cost of transacting in the trade, right? So if they can get a positive swap here versus elsewhere, I think this currency pair, when it comes to the yen cross, would be one of the more favorable one when you're playing the intervention play. So I like this one. So if anything, I close out dollar yen, dollar CAD at break even and leave this one running. Who knows, right? But it can go either way. That's kind of my thoughts there on Swiss yen. Anything
Mhm.
different there, Marco?
I just want to say that, like, the two most powerful players in the Forex game, which is the central banks, Bank of
Mhm,
Japan,
mhm.
SMB, are saying we don't want, let's say we don't want the Swiss yen to go above 203, 204. And I mean, that's a really good opportunity to short, because they're most likely going to defend the level. And you don't even need both of them to defend. You just need one of them to come in. So the
Exactly.
probability of price going above this high is, in my opinion, extremely, extremely low. Yes, it can happen, but it's totally worth taking. Again, not financial advice, but in my head, it's totally worth taking. And I think not a lot of people are talking about it, which is also nice, because
Yes,
it's not a popular trade idea. So
exactly.
that's
Exactly.
always
By the
good.
time everyone starts talking about it, it has already moved some. And
Absolutely.
to
Absolutely.
Marco's point, guys, like, not financial advice, right? The timing of it is unknown. I clearly don't know. I truly don't know
Yep.
when one of the central banks is going to intervene. So this thing could be open for some time. But the reason why this one specifically, I'm willing to leave it open, is because you have the central banks in your favor, and you also have the cost of doing business is in your favor as well. So just so you guys know, like, this thing could be stale for who knows how long. I think it was Sluggy that mentioned that Bank of Japan has been looking to intervene for 6 months now, that's completely true. But I think
Mhm.
it's a good
Yep.
level. You kind of have that invisible ceiling there. And to me, this is a good opportunity. And especially if you're early, the best trades are when you're early and you catch the whole move as it develops.
Absolutely. And it's not about like catching the trade that has 100% certainty. It's just about executing setups that have an edge in their favor. So yes, your win rate is going to be 50%, but your winners will be far, far bigger than the losses, which is the name of the game. So the win rate doesn't really matter. If you can have 50%, 45% win rate, you're doing pretty well. I think the best traders in the world have 55. Maybe I think I saw 58 as like the highest win rate for a long-term successful trader. So 50% is absolutely great. And even if this loses, I don't care. I'm just gonna enter higher.
Yeah.
Like, the higher we
Yeah.
go, the better the opportunity. If we hit 204, that's like the best possible level to go short, because this is very likely to happen. Let me just check what happened on the Swiss yen in, when was that? I think it was 2024 that we had an intervention. 2024 July, I think. Yeah, here it is. So this was the Bank of Japan intervention that started in July, and it had a definite effect on the Swiss yen. And this can very easily happen again from just one central bank. Are you planning to hold your positions through the weekend, or are you looking to close? Trump may put boots on the ground over the weekend. We know that he likes to do, let's say, military missions over the weekend when the markets are closed. So what's your game plan?
Yes, Swiss yen, I don't mind having it open. Just because, like, during this whole conflict here, let's look at one currency at a time. The Swiss. Let's look at the base here. The base currency on this one, like the dollar Swiss has been trading to the upside. So that means during the whole conflict here, the Swiss has continued to weaken. So if you do get an escalation, likely than not, the trend continues there, and you get dollar Swiss pop higher, and that only weakens the Swiss even more. So that kind of works in favor of the trade there. The yen, similar situation, it will probably weaken as well. So the implied move, I would say, for a escalation or something like that would be somewhat flat, in my opinion. Or you may gap up here, maybe in the 200 or maybe even lower, but I don't think it would be detrimental enough to really affect the trade a lot, unless you get something completely different. But who knows, right? When it comes to dollar yen, if you were to get an escalation, to continue my point there, during this whole conflict, the dollar yen has been trading higher because the dollar has been the preferred safe haven there. So maybe I do close out dollar yen because you do have a chance that it gaps higher. That's a possibility. CAD yen, similar situation as well. If you do have that relationship with oil and the Canadian dollar firms up a little bit there, then this one, maybe I can just, avoid unnecessary drawdown and just enter at a higher price. That's definitely a possibility there too. So I'll see what happens on Friday, but they're both at break even, so it really wouldn't hurt me. I would rather attempt to trade it higher or short it at a higher price than just keep it open, and especially avoid unnecessary swap costs, all that good stuff.
Yeah. And I just checked on the Swiss yen when the war started. So the 2nd of March, it actually sold off. So it's acting like a risk-off pair. See, 2nd of March, sell-off. And from the start of the war, we haven't gotten any highs. We were just producing lower lows. So this is a pretty good risk-off play. And I think it's actually a pretty nice risk-on play as well, because again, those central banks and the interventions. So you should be positioned for both. What do you think about the S&P? So are you projecting a sell-off into the rest of the week, or do you think maybe this is the week where we break the pattern?
No, I think I think I'm kind of leaning more into neutral to pessimistic when it comes to the Middle East there, and from by definition, you're under that 200-day. That is bearish technical structure.
Yeah, that's bad.
And I think the pattern continues. You get the optimism pop on the beginning of the week, and then by the weekend, you're lower. So I think that's going to continue to be the case there, unless something changes. And from my understanding, I don't think we have anything significant new on the docket as far as scheduled, speeches from Trump or anything like that, or the other side. You do have, NFP tomorrow and unemployment rate looking to kind of become a little bit better, but we'll see if that really moves the market again. This whole driver, I think, like the actual fundamental data points take a back seat when it comes to the narrative of the higher oil prices and all that stuff. So what I would recommend to anyone is watch yields. That's going to tell you whether the market is risk on or risk off, or if it's pricing tighter policy. At the moment, you did see the 2-year yield jump higher a little bit, but it did fade off a little bit. One thing I would mention here, I saw this morning before I came on, CME Fed rate probabilities. We're now looking at the nearest rate cut is December of 2027. So at the end of next year. So this before, this was actually kind of skewing into you get a possible rate cut in 2027, like in the beginning. Now it's pushed all the way to the end. And so, watch yields. That's going to really drive the price for really all asset classes. Higher yields means shorter S&P, higher dollar, higher oil, lower gold, and vice versa for the other way around.
Yeah, agreed. Yields are what we should all be watching, absolutely. And they're flat on the day, which is interesting because oil is going crazy. S&P is selling off. Yields staying flat. So that probably tells you something. To be honest, I'm a bit surprised of the overreaction from Trump's speech yesterday. I was not expecting such a big reaction on oil. I'm guessing there's a reason for it, but I do not know what the reason is. Maybe it's the 1 month mark that has passed. Maybe it's the new month, and people are saying, this thing is still lasting. Let's buy some oil, or let's go a bit of risk off.
Yeah, me personally, like I was remembering the comments that he said in the beginning of the week, where it was essentially, it seemed like he was really going to taco.
Yep.
You know, we're willing to leave the straight, or those things like that.
Yep.
I was like, well, maybe he's feeling some pressure to kind of, you know, get out of there. And maybe that was a front. And then yesterday, that was just the complete opposite there. So I think markets were very, very optimistic, pricing in that, you know, taking into consideration what he was saying before. And then he just reversed the whole narrative entirely. So I think that's why you got that knee-jerk reaction. But we'll see. But anything oil above 100, 105, really, that's very problematic if it continues on.
Absolutely. So I'm gonna do my giveaway right now. Let me just post the link.
Sure thing, man. I'll go ahead and get out of here. We'll talk tomorrow.
Yeah, sure,
I think we're gonna cover NFP. I think so. That's gonna be fun.
Yeah, NFP tomorrow. So I think we do have a joint segment, which I'm looking forward to, and NFP is gonna be just before that. So we're gonna have some time to comment on it. Well, thank you, Alan, for joining. I'm looking forward to tomorrow, and good luck with the positions. Hopefully, Swiss yen starts going lower.
All righty, man. Hopefully, if we get enough people on the train, it'll start to move a little bit.
Yep, absolutely. See you.
All right, man. Take it easy. See you tomorrow.
So the form. Let me just find my form. Okay, here it is. If you want to participate in the DNA funded giveaway, now is the time. You have a jot form in the comment section. Fill it out, and you'll get entered into a wheel of names. Then I'll pick a random winner, and that winner will get a 5K one-phase DNA funded account. If you want to get funded and you don't want to participate in the giveaway, or you don't win the giveaway, we have the discount code A1 Live for 25% off on any DNA funded challenge. Okay, so code is A1 Live, 25% off. Here is my personal 25K two-phase funded account. So I passed the phase 1, I passed the phase 2. Currently down $700, so not working so well at the moment, but I'm holding the positions. I'm seeing how the price develops. I have a sell on gold against the euro. I have a sell on GJ. And yeah, nowhere near the total loss yet. So I've had a great experience so far. There's a big broker behind this prop firm. They're using TradeLocker, which is pretty amazing. They have a built-in risk calculator, so you don't need to use all of the online Forex calculators, which suck. I definitely suggest checking out this prop firm. And I suggest using the code A1 Live because you get a great price as well. Breaking news. Do we have breaking news? Let's see. Well, Financial Juice is taking long to load, so looks like there is some breaking news. So oil selling off. What do we have? UJ dropping, Swiss yen not doing much, S&P recovering the losses. Okay, so breaking news: Iran drafting protocol with Oman for Hormuz Strait traffic. Looks like that is pretty bullish. So awesome. That's good to see. Anything positive around the whole conflict, I love to see it, because making money when there's a war, I don't know, it just feels off. Something is off about it. So hopefully things actually get resolved and they do have some sort of a deal, some sort of negotiations. Let's see. Let's run through the list. So oil, well, it's still holding. It's still 10% up on the day. Damn, I took profits at the exact right moment. So I took my profits I took 50% of my position off like 5 minutes before my segment on the stream. USD JPY selling off, which is nice. Swiss yen staying there. The Nikkei recovering, gold recovering, euro dollar, okay, staying a bit flat. Not a lot of movement, maybe some movement on the S&P. Actually, a lot of movement on the S&P on the 1 hour chart. Yeah, a lot of movement. What about the yields? Let's see, yields. Yes. Oh, yes. Big move, big move. Big move in the yields. Absolutely. Interesting. So where is Nick? Nick was opening up the stream. So Nick starts the stream and then guests come. You're gonna find him on the A1 stream schedule. So if you're wondering when a specific show host is coming on, this is it. Okay, this is the schedule. ChatGPT not working. Yeah, not working at the moment. I'm trading this challenge purely using ChatGPT, by the way. So right now in some drawdown, not working so great at the moment. But again, it's just part of the game, part of the probabilities. And this is mostly for my YouTube channel series. Okay, so let's do the giveaway. I'll actually post the link to join the giveaway one more time. You have 1 to 2 more minutes. So let me copy that. 1 to 2 more minutes to fill it out. In the comment section, you will find the link to join the giveaway. Okay. And while we wait, let's analyze one more thing. So what can we do from the list? I mean, there's not much that has changed. Everything is still connected with the price of oil. Everything is absolutely connected with the price of oil, even gold, which is starting to act as a risk-on asset. To be honest, I can tell you about my game plan for when the war is actually over. 2 things I'll be buying is the Nikkei and gold. I love the Nikkei. I think it's one of the best stock index in the world. It's beating the S&P. It beat the S&P in 2025, and it's still beating the S&P. Capital is flowing into Japan. The prime minister and the government, they are super dovish. So this is like a no-brainer. Gold, I like as well. I think it has been heavily sold off. I think it's time for a recovery. Let's jump quickly onto the Edge Finder. Let's see what's up. So if we look at gold, let's take a look. Neutral. I need a bullish print. So if this flips bullish, I'll be pretty happy to get in. Even though the conflict is still going on, I'll be pretty happy to buy gold. So even though the conflict is still lasting, if the Edge Finder flips bullish, it's going to be game on to buy gold. I think this is a pretty nice level as far as technical analysis is concerned. So time for the giveaway. Today is the 2nd of April, not the 1st. So no April Fools today. We have some entries. Let me copy the entries. Let's go to my wheel, paste, spin, and let's see. So, JT. Yeah, JT. See, I can basically forecast the winner. JT, congrats on being the winner. I'll send you the code after my segment. I just want to remind you, if you want to get funded with DNA, A1 Live gets you 25% off. Okay? And this is my account. Yeah, 2 trades open at the moment. Nowhere near the total loss, thankfully. So trying to get a payout. That's my game plan as far as the resolution of the conflict. I'll be buying the Nikkei. I'll be buying gold. As far as risk off is concerned, so your question may be, are you looking to go more into risk off? Because I have a buy position on US oil. I have a sell position on Swiss yen, which has turned out to be a bit of a risk off position. I'm not looking to increase my exposure. I'm looking to be more patient. Okay, be more patient as far as the risk-off situation goes. A lot of the traders that I'm watching are a bit flat at the moment because they're uncertain. Because you're getting sort of a ping-pong market where one day we're risk off, next day we're risk on. So being a bit more patient, waiting for the next week, waiting to see what happens with the S&P. Will the pattern break? I was talking about this pattern for a while now. Mondays tend to be bullish from the start of the war. Mondays tend to be bullish. This was the 2nd of March. This was the 9th of March. This was the 16th. This was the 23rd. This was the 30th of March. And then the market sells off. Will the same thing happen again? Or is it time to flip? Okay, is it time to flip bullish? Will we rally into the week's end? That definitely changes the whole situation. So I'll be monitoring the markets. I'll think about all of that. Are you looking to buy euro after the de-escalation? No, I'm not, because from my research, euro dollar tends to sell off when there's an oil shock and the ECB gets hawkish. So personally, whatever happens, an oil shock will persist. A lot of oil infrastructure has been destroyed, so an oil shock will persist. But whatever happens with the conflict, I think euro dollar goes down. That's just the forecast. I think the euro is a pretty weak currency and it's going to get sold off. Am I playing it at the moment? No. So let me just close this. I'm being patient on the euro dollar. If that changes, of course, I'll put in an update in the A1 Trading Discord. So to get all of my positions, click the link in the description, join the A1 Discord, use the code Marco to get 25% off, and you can trade with me. That's about it from my segment. Don't go anywhere because I think Tiger is coming on. Let me check. Let me check on that. Let's see. Live stream schedule. Yep, I do think Tiger is coming on. No, show is over. Okay. So I'm the last one for today. You can catch me tomorrow. We're going to see the NFP print, and then Alan and I will be having a joint segment commenting on the NFP and commenting should you close your positions before the weekend. It's going to be pretty important. Thank you for watching. See you in the next one. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.